typical precursor of a bubble breaking. If you're looking for the very early warning signs of a bubble breaking, you find the stocks that have done the best, SPACs and particular SPACs and Tesla and Bitcoin. And you wait until they start to have these big daily drops, and then they recover and they drop and they recover. And that's the very early warning. And the market in 2000, for example, didn't go together. They took out the pet.coms and shot them. The rest of the market continued to go up. It didn't even deign to notice the shooting of those little guys. They were only worth scores of millions or a couple of $100 million. Then they took out the junior growth stocks and shot them, and the market kept going up. And then they took the medium growth stocks and shot them. And finally, by the summer, they were shooting the Ciscos. And the entire tech part of the market had been shot. And that had been 30% at the market peak of the total market cap. And yet the S&P by September was at the co-equal high of March, which meant that the other 70 had continued to rise. So that is a typical way. Bubbles don't necessarily break en masse, but having sliced off the tech and the dot-coms, then finally the 70%, like a giant iceberg, rolled over en masse, the 70%, and went down for 2.5 years.